and it's a mixed bag on the local trade so far this morning. The JSE closing lower yesterday, shedding gains recorded earlier in the session after the United States reported slightly stronger than expected consumer inflation. Matete Thulare is head of foreign exchange execution at Rand Merchant Bank, joining us on this Friday, the 13th. Mr. Thulare, thank you very much for your time. Your quick overview of how local trade is faring. Include the Rand in there, please.
Good morning, Claudia. I suppose the Rand is back at 19, and whilst we do have some mild downside bias, overall it seems like we are back within the trading range and obviously being very range bound at this point in time. Yes, like you say, yesterday we did have the US CPI coming out slightly higher than expected. Now headline inflation printing at 3.7 versus the 3.6 that was expected. This now brings the Fed to most probably a hike and obviously increases the probability to around 50 to 60% chances of them hiking at their meeting next month. Now, the bigger moves that we saw yesterday was in the US Treasuries as yields jumped again, but there's little feed-through into global markets this morning as yields are still well off their highs. Now, the Rand has been an average performer for the week, but if you just look at the weekly performance, we have been slightly outperforming relative to our other emerging market peers. Now, the Rand does seem to have a sort of strengthening bias at this point in time, but it seems that we are back to this trading range of around 1870 to 1930. If a break comes, it will be on the back of large US Treasury move yields.
Let's then talk about oil prices up after the United States tightened its sanctions program against the Russian crude exports. Now, this raises supply concerns and including the global inventories that are focused to decline through the fourth quarter. Talk us through those market moves.
Yeah, quite an interesting one there. I mean, oil is headed for a modest weekly gain as the fears around the Israel-Hamas war could destabilize the Middle East and obviously limit the global supply. And that has been slightly offset by the signs of flagging demand. Now, most of the surge that we saw in the prices on Monday following the Hamas attack on Israel has been unwound on expectations that the conflict will be contained somewhat. I mean, we've already seen the likes of Saudi Arabia urging peace in a rare high-level diplomatic call with Iran. And if you just also look at the International Energy Agency saying that even though you've seen the oil prices around that $100 a barrel, it showed that prices had climbed too far, and I think it is going to start eroding demand, although they still do see world record consumption this year. Now, OPEC yesterday coming out to saying that they are still going to continue with their supply deficit this quarter, saying that global inventories will decline by about 3 million barrels a day this quarter. So it still shows you that it is going to be a volatile time for the oil market over the next few weeks before we close into the year.
Let's talk manufacturing production, which slowed to 1.6% year on year in August. This is well below the market estimate of 2.3%. What does this data tell us about the state of the sector?
Yeah, so look, I mean, manufacturing and mining as well. I mean, that recovered slightly in August, but business confidence is really passive at this point in time. I mean, that is really lacking substantial upward momentum. Yes, manufacturing output was up in annual terms during the month of August. Mining production was down for the second month in a row. Now, the picture within the manufacturing sector remains really challenging, with only a margin of counter. If you think about it, there has been a slight improvement given the competitiveness of South Africa's exports to the global markets due to the Rand weakness that we've seen and some degree of some firmer domestic demand locally to support the renewables, especially given that a lot of companies are going off the grid. If you also just look at the largest positive contributors in that manufacturing increase was the petroleum, the chemical side of things, the rubber and plastic products. Now, it is becoming clear that manufacturing and growth in the mining sector, it is going to be somewhat subdued. If you also think about it, that manufacturing will continue to be held back by domestic-owned goals such as load shedding, infrastructure projects that are slowing down, and also a slower global growth environment in the long term. And also, if you just also think about the industry itself, it's facing a lot of headwinds and also a lot of OPEX and CAPEX that the companies need to endure, especially as they go off-grid. So, yes, the number was slightly positive, but I don't think at this point in time it's anything to be cheerful about.
Let's conclude the conversation with South Africa, beginning the discussions with the World Bank, ostensibly to extend a $1 billion loan to support Eskom's transmission company and then to upgrade Transnet's railway infrastructure. Do we have the money or the capacity, perhaps, to pay back this money?
Yeah, quite interesting statements coming out yesterday from the Deputy Minister of Finance, David Masonda. I mean, he's saying that there has been discussions, with the IMF and also the World Bank at their meetings in Morocco yesterday. Now, he emphasized that there's no firm commitment yet from the global lenders that the financing will be approved. Now, if you cast your mind back to 2010, I mean, already the World Bank had previously lent money to Eskom for about $3.7 billion to help finance the construction of Medupi and two other renewable energy projects. Now, in 2022, already you saw the World Bank also approving a 9 billion rand loan to help South Africa, lower its greenhouse emissions by decommissioning the Komati coal-powered fire station out in Mpumalanga, and that needed to use the renewables and the batteries. You've also seen there's been talks around Transnet where the New Development Bank has said that they're looking to borrow Transnet about 18 billion rand to upgrade their locomotives. So I think for me, should the World Bank loan the two entities being Eskom and Transnet be approved, it would obviously increase South Africa's debt payment requirements, adding to the growing concerns about the country's long-term debt sustainability. And obviously, this is something that also I think the finance minister will touch on in the next 2 weeks when he gives us the medium-term budget statement on the 1st of November.
Head of Foreign Exchange Execution at Rand Merchant Bank, Matete Thulare. Thank you very much for that markets update.